Welcome back to another weekly review. First of all, before we get started and talk about markets and everything, you're wearing red. You never wear red.
And Red's banned in our office,
we actually
red,
are not allowed to have red anything. So.
Yeah, I try not to do that. No, this is my son's high school colors. They are participating literally today in the state meet, and so tonight he's made it back.
Swimming
in the 50 and the 100 freestyle. So he is in the championship heat of the state finals tonight in those two events as a junior, which is pretty exciting.
Wow, that is awesome. Okay,
so,
well,
go Jay.
Impressive. So you can wear red for today, I guess.
Just for today.
All right, so tell us more about what happened this week. I mean, I think the big news that was earlier on in the week was Amazon. They are now in the Dow. So what does that mean?
Yeah, this is... I don't know how big it was. We certainly made probably more of a big deal than most would, and I don't think the rebalance is going to happen for a little while. But this is a great example and a learning experience for so many out there. And whenever this happens, I think it's important to touch on. Amazon is entering the Dow Jones Industrial Average, and it is replacing Walgreens. Mm-hmm. Now, there's a few things to think about, and I wrote about this, obviously, in the piece today. But 1896, Charles Dow creates a proxy or a basket of stocks to kind of correlate with the U.S. economic scenario or the prosperity that he felt was coming. Called it the Dow Jones Industrial Average. 12 companies representing basically the industrial side of the United States. Companies that some you may have heard of, like Chrysler or General Motors or General Electric, and others maybe you've never heard of, like American Tobacco or American Sugar or something like that. But what's fascinating is that was started in 1896. Fast forward to 2024. We have hit a new all-time high in the Dow Jones Industrial Average, just crossing 39,000, but none of those original 12 companies are in the Dow.
No, not at all.
So I really want people to think about that for a moment. How is it that none of those companies, and most of those companies, by the way, are not in existence anymore. Like they went out of business.
Right.
So how is it that a majority of those companies are out of business? If they are in business, they're certainly not in the Dow, yet we're approaching 40,000. It's simple. There are constant companies that are coming out and new companies that are being put in. And this is a great example. And we have since surpassed the sort of standard term of industrial when you have companies like Salesforce, Microsoft, now Amazon, or even Goldman Sachs as part of the Dow. So it's a fascinating system, and it's worth to understand. When I tell people, they ask, where do I think the market's going? And I say, well, in the long term, it's going higher, a lot higher. And they're like, well, how do you know that? Like they feel like that's kind of pulling wool over theirs. How do you know that? Because it's probably going to be comprised of different stocks. And if we start mining asteroids one day, those stocks will be in the Dow.
Right.
There's no question. That's the first thing. Second thing, and this is worth understanding as well, is unlike the S&P, the Dow is a price-weighted index, which means the higher price of the stock, the more weight or the bearing it has on the movement of the Dow. Walgreens is around a $20 or so stock. It's being removed. And in taking its place is Amazon, around a $200 and some odd stock. So immediately we're totally changing industries. We're going from basically a retail company to a tech company.
Right.
And we're giving it much more weight in the Dow. So if things continue to be good for the tech business, more than likely that will thrust the Dow higher. So people can get angry about all the things that are going on in the world right now and all the frustration, but meanwhile, markets continue to go higher because they're led by companies that are new, they're innovating, and they're moving into the indices such as Amazon.
Yeah, and I think it's important to note, too, the Dow Jones is not the only index that does this. The S&P 500
They all do it.
They all
Absolutely.
do it. So they take companies out that are doing poorly. They put companies in that are doing better, and that's why over the long term, indexes have been a really good option for investing long term into tons of companies. You can get diversification in a lot of areas.
Which leads us to our second point in this week's letter. NVDA, you'd have to be living under a rock not to know that NVDA has had a historic run, and just recently this week absolutely blew the cover off the ball for their earnings report. Every quarter, companies have to report their earnings, how their business is doing, etc. The bar was set at an incredible height for NVIDIA.
Right. The expectations were huge.
Hurdled it while drinking espresso and with one pinky in the air. They're like, I see your bar. I shall elevate further. But here's what's fascinating. While many people out there, there are very, very few people out there that own a sizable position in NVIDIA or maybe own NVIDIA at all.
Yeah.
But guess what? It's now 6% of the S&P 500. It's a huge position in the S&P 500. So bravo to you, clients of ours that own a core position in the S&P 500 and have for a long time, because guess what? You own NVIDIA. You, in fact, own a pretty good chunk of it. And you own Microsoft, and you own Amazon. So it's, again, another lesson that you don't have to be – stock picking is fun, and we love to go on television, and we talk about stocks, and we do that. But becoming a passive investor with a tried-and-true strategy of buying indices, letting them reshuffle, and riding the winners is a pretty darn good strategy.
Yeah, absolutely. Anything else to add?
Yeah, I will add this, that despite the fanfare of the Dow over 39,000 and the S&P at new highs and NVIDIA this and you name it, underneath the surface, this market broadly continues to be controlled by interest rates.
For sure.
Many of the groups that are very interest rate sensitive, small companies, medium-sized companies, emerging markets, etc., have really not moved. And that's because interest rates haven't moved. And why haven't interest rates not moved? Because there's nothing economically to be reported yet that could move those interest rates.
For the Fed to then cut the interest rates, right?
Well, maybe
and
not
the market
the Fed.
to react to it.
The market's going to react well ahead of time before the Fed. It's like us looking at the weather next week and going, oh, it's going to snow. Like, I'm mentally preparing to wear a coat and a hat, and then when it comes, I already know that that's what I'm wearing, right? So this is sort of the way the market operates, but it's going to first move on economic data. Next week could be a driver. We have jobs numbers coming out. We have PCE. We have some economic data. But what I find interesting, Logan, is despite the elevation in certain areas, I cannot continue to stress this enough, small caps are flat on the year.
Right.
Now, you look at that one of two ways. You could say, well, that's a sign of challenges to come. Or you could look at it like we're looking at it and going, well, actually, that's where the opportunity is. That's where we see good risk reward, good value right now. Areas like emerging markets, small caps, medium companies, et cetera. Because even if it's not right now, let's say it's not in the next 2 months that interest rates start coming down, they will start coming down. They're not going to continue to move higher. They are going to come down eventually. And it's kind of this waiting game. But it allows you to make sure you're in the right areas, in my opinion. So it's such a fascinating environment we're in. I love it. It's fun. It's fun when everybody's making money. That's great. Don't get me wrong. But it is so fascinating, the intricacies underneath the surface as well.
Okay, great. Well, we'll give you that news next week whenever we learn more about what happened in that economic data. But we'll see you then.